The past few weeks have been especially good for South Korea's stock market. The benchmark KOSPI crossed the 3,000 mark threshold last Friday for the first time in 3.5 years. And hopes are high that this could be just the beginning for South Korean shares. For more, we turn to our economic correspondent, Park Jun-han, for more. Welcome.
Welcome. Thank you for having me.
So, Jun-han, it's been 3 weeks since the June 3rd presidential election, and it seems like the post-election honeymoon rally is still ongoing.
That's right, Dami. South Korea's benchmark KOSPI, for the first time in 3 years and 9 months, surpassed 3,100. And it's also notable that South Korea's stock market ranked first in returns for June among G20 countries. And this is by far the highest increase among all G20 countries, as no other country saw gains exceeding 5% in June. Now, among the various factors that led to the rally, experts point to eased uncertainties and expectations surrounding the new Lee Jae-myung administration's economic policies as key reasons for the surge. Take a listen to what an economic analyst has to say about the momentum behind the rally.
The weakening of the dollar, coupled with a cycle of fiscal policy expansion and interest rate cuts in emerging economies outside the U.S., have created a favorable environment for investment. After a period of political uncertainty, the snap presidential election removed some of this and resulted in a strong inflow on policy expectations.
Well, I do understand why Korean stocks were underestimated and underperformed, but wasn't it just 3 months ago that the KOSPI recorded its yearly low?
Right. The first 2025 half of South Korea was marked by both internal and external uncertainties, but which the market is extremely sensitive to. As mentioned earlier, the political instability caused by the martial law declared last December by then-President Yoon Suk-yeol pressured investor sentiment and led to an outflow of foreign funds. Moreover, tariff threats from U.S. President Donald Trump also negatively impacted investor confidence. In early April, Trump announced plans to impose 25% reciprocal tariffs on Korea. The announcement heightened concerns about inflation and contributed to the weakening of the competitiveness of South Korean exports. However, Trump temporarily suspended reciprocal tariffs for 90 days, just days after his initial announcement, leaving room for negotiation. Since then, stock markets around the world, which had plunged earlier, began to rebound. President Lee, who has long promised to usher in the KOSPI 5,000 era, declared the start of this new chapter as, quote, a new period with new hopes. Take a listen to what he said last week.
오늘 대한민국 주가가 2,992.1을 찍고 있던데 새로운 기대로 오늘을 기해서 3,000포인트를 넘어서서 새로운 3,000 시대로 나아가면 좋겠습니다.
He also visited the Korea Exchange earlier this month and highlighted the importance of dividend payouts and a zero-tolerance policy for stock price manipulation, pledging to lead the market through various reforms, including shareholder return policies and amendments to the Korean Commercial Act.
Well, President Lee Jae-myung, we all know, is more committed than ever to achieve that KOSPI 5,000 during his term. How is he looking to do so within the 5-year term?
Of course, Dami. So it will be crucial for President Lee's policy pledges to be implemented swiftly. Take a listen to what a chief economist had to say about KOSPI's long-term growth outlook.
While the government is trying to stimulate domestic demand through a large-scale supplementary budget, measures such as expanding AI investment and improving systems related to commercial law, amendments should be implemented swiftly. Moreover, the early settlement of tariff negotiations will help lay the foundation for achieving this goal within the next 2 to 3 years, if not immediately.
Well, Jun-han, it could not be a smooth ride to see KOSPI to reach 5,000 just yet, but what are some of the hurdles or obstacles that could be on the way to reach that 5,000 mark?
Well, actually, there are some variables that could prevent further momentum. Tariff negotiations are approaching with less than 2 weeks left until the deadline. Also, although there's a temporary ceasefire, the Middle Eastern conflict between Israel and Iran could heighten market uncertainties if both sides clash again. Take a listen to what capital market experts have to say about factors that might affect the local market.
In the case of wars, we'll have to wait and see how long they last and how predictable they are.
as both factors will affect the economy going forward.
I think the overall U.S. economy and tariff policy, along with South Korean companies' second quarter results, will be key factors in determining how our stock prices move in the third quarter.
Investing always comes with both opportunities and risks. In times of rapidly changing markets, I encourage viewers of our channel to manage their assets wisely.
Of course, wise decisions for wise investment. Jun-han, thanks so much for coming in today. Thanks for the report.
Thank you, Dami. I hope you see you soon.
All right.